All right, welcome back, everybody. Liquid Sundays, SPX market overview for week of August 10th through the 14th. This is not financial advice, and I am not a financial advisor, so please do your own research. Let's jump right into today's video. What to expect this week. The technical bias remains moderately bullish into this week, supported by the recent breakout, positive momentum, potential performance chasing, short covering, and the pain trade still pointing higher. Near term overbought conditions after a strong week raise the probability of consolidation or a technical check back toward the 7600 area on the S&P rather than immediate parabolic extension. Key risk catalyst calendar. Wednesday, we have our big event, August 12th, July CPI. Consensus about 3.4% year over year headline, 2.5% core. This is the primary market moving event. Cooler than expected data would reinforce the soft landing, delayed hike narrative, and likely support further upside. Hotter data could reprice September odds higher and pressure yields and stocks. Thursday, we got PPI and initial claims. Some other notes, we have existing home sales on Tuesday, retail sales, consumer sentiment later in the week, plus earnings from Applied Materials, Cisco, and other AI semiconductor names. Geopolitical developments, oil price volatility remain wild cards. August seasonality is historically mixed to soft, as we discussed last Sunday, but current momentum and breadth override pure seasonal concerns for now. Bottom line, from a pure price action standpoint, the path of least resistance is higher or sideways to higher as long as the S&P holds above the 7600 to 7700 support zone and the NASDAQ stays constructive above 26,000, 26,200. A decisive break lower through those levels would shift the short-term bias to neutral, corrective, monitor volume on any pullback, ideally lighter, and intermediate confirmation from yields and the dollar. All right, let's take a look at some levels. So this is the SPX weekly. Obviously, monthly, we do have, we are breaking out. July was an inside bar. We are currently trading, if you look at this whole range here, previous month high to low, we've already hit the extension. If you want to take this whole range from this breakout here, we are almost there. 78.68 would be the 1618 breakout from this April 26th. Basically, swing high. If you want to take the absolute breakout here from this range here, use that as support. You're looking at around 8,000 on a monthly breakout level. If you look at some momentum indicators here, MACD is still positive on a monthly basis. Ready Aim Fire is oversold, extended, but we are still in a monthly squeeze. 1, 2, 3, 4, 5 bars in from the most recent pullback here. So if we take a look a little bit closer at our weekly, you can see here we've got a weekly bull flag breaking out last week. Here's your 21 weekly or your 20 moving average, 20-day exponential moving average. And if we take swing high to swing low on this extension here, we get to about, if we use the breakout as support, And we use last week's resistance as our resistance level on a weekly basis, 79.19. If we just use the absolute swing high and swing low from previous week's candle, which is what we pretty much kind of do week to week, you're looking at a pivot, weekly pivot of 76.52, resistance at 78. Let me get an exact number for you here. 77.93, and support is 75.04. But we'll look to see if 7600 holds. That's going to be our key area of support. From a weekly standpoint, though, obviously 76.52 looks like a good level to target for our weekly support level. A breakout above 77.96 or 77.93 rather would get us somewhere around 79.76. And on a daily level, from Friday's candle from the cash session here, looking at about 78.19 as the extension from this. Well, let's take this breakout here. 78.53 would be the breakout from this little consolidation here, from this pullback, it's this breakout, slight pullback, and then continuation on a daily level. Near term looks like 78.53. 77.46 would be the pivot for this range here. If you want to just take Friday's candle, though, take Friday's candle here. SPX 77.64 was resistance. 77.41 would be our pivot, and 77.18 is support. So just from pure price action, a break above 77.64, we target previous week's high, previous week's swing high, and obviously a breakdown below our support, we would target previous week's swing low. So still looking constructive. I think momentum now on a weekly basis. If you look here on the SPX, has crossed back over. Get rid of this. So we got the weekly bull flag, right? We look at this from a weekly perspective here. And then we do have potentially, we had some consolidation here, and the weekly squeeze is still firing. And we have ready aim fire, thrust pointing up, trigger, and MACD, which is telling us we have some positive momentum crossing back up here. So that's pretty much SPX levels and near-term price action. If you look at the hourly chart here, we do have what looks like a little maybe cup, and we can see better on the overnight. We gapped up a little bit, but let's just take a look real quick here. I was kind of pointing out this on the hourly. We got a little cup action, cup rounded bottom here on this pullback. So if we take a look at SPX 500, It is it's about 6:40 a.m. Eastern Standard Time right now, so we did have um, some positive price action overnight. Basically, it was kind of looking at something like this. Maybe we get a little cup and handle breakout this week. Maybe a little bit of pullback here to the hourly 20 exponential moving average, which is acting as support after Friday. But keep an eye. Obviously, we'll have our daily SPX, SPY, ES day trade plans coming out before the bell today. I did have some requests for NDX. Take a look at NDX. You can see here we did. So if we look at, we'll start on the weekly level here. Did break the downtrend here. The expectation is if we have basically our momentum still was is sloped negatively here, but we do have on a daily basis a positive cross back up here, ready aim fire, also pointing up. We got a trigger to the upside here, and we have a squeeze that is potentially going to act as a little slingshot here to the upside. So near term targets, if you wanted to take the weekly level here on the NDX, you can see the weekly. I was talking about this most of last week and the prior week. You know, we had a mean reversion to the weekly 20, a dip below, and then a slingshot back up over it, which is positive. We'll take last week's candle here, weekly pivot on NDX is going to be 29,128 around. Support 28,262, 28, and resistance is going to be 29,946. Extension breakout here. You can see obviously we're going to target all-time highs. So you're looking at 30,746. So if we trade back into this support line here, obviously we can see we have a clear support level here that we can use as our bogey for a much bigger pullback corrective if that does happen later on in the season. But I think using the weekly 20 exponential moving average is a really great signal for whether you're going to have a much larger correction. So we'll keep an eye on that. But right now, I think that momentum seems to be turning back higher on a daily basis. Looks, similar. Also reclaimed our 20-day exponential moving average, and again, reclaiming this downtrend was important. We had the gap up here, so this whole range here we'll use on our daily time frame here. So kind of immediate near term pivot 29,522, and then obviously we talked about it's going to be the same resistance there. Gap at 29,000, about 20,100 is going to be kind of key support, and You can see the 20-day exponential moving average is 28,953.93. We break down below that, fill the gap down here. This candle closed at 28,776. So if we break down below 29,100, you can target, half the gap or the full gap, but you got the 20-day exponential moving average. Also, that's going to probably act as support. We get positive momentum, which we do have on the daily. We had the cross back up here that we just talked about. So that's the NDX, still looking pretty constructive. Got to play catch up to the SPX. Potentially, we did buy some. I had an idea for some QQQ calls. Take a look at QQQ really quickly here. If we get back over this swing high of 728.54, you can see the same thing here. Obviously, we've got a daily squeeze, MACD positive crossover, ready aim fire lines up with our thesis. So we're going to look for some continuation above this swing high here, and then potentially test that 740 to 750 level, all-time high again. So QQQ looking constructive still. Also had a request for silver. Silver we have. A cross back up to break the downtrend line here. If you look here on the weekly level, we still haven't broken this weekly trend line here. We're testing basically this. Going to be testing the weekly 20 potentially here. Will probably act as resistance initially, near term. But breaking back up above this weekly trend line would be really constructive. You can see here on a daily basis, these are weekly too. You do have a small weekly kind of trying to bottom out here. If you look at the daily, obviously we did cross back up over here of this consolidation, a little bit of bottoming, crossing back up here. So, but if you're just looking at, this candle here, I think is going to be important when trying to look for near-term price action. We still have negative momentum on the weekly, and we are still technically in a weekly squeeze that's fired with downside, but the downside is starting to wane. But let's just take a look at weekly pivot level here. We'll use this whole range here. So first big hurdle is obviously going to be previous week candle. So previous week high on silver. This ETF here is 58.18. The low is 51.12. And as far as a pivot goes, we can use this around 54 bucks as our weekly pivot. And then obviously breaking up above, we're going to look at this 59, almost $60 area for silver. And the extension here, if we get over this weekly 20 gets us to 63.38. So those are your kind of near-term weekly levels. Like I said, getting back up above this this weekly trend line here is important. This is our diagonal resistance line. But if you also want to take previous support here, usually plays a big role here if this can be reclaimed. This level here, which is 60.37. You get back up above $60, $61. Obviously, we'll target the extension here, but that would be constructive. Ideally, we get back up above this trend line here, right? And then, you get a little bit of a retest perhaps for confirmation, and then maybe a rally back up to test some of these swing highs. All right, so hopefully that's helpful. A couple more requests that I had. I had Qualcomm. Qualcomm. We still do have a weekly trend line and weekly exponential 20-day moving average to get back up over. But this looks like perhaps yeah, there's a squeeze here. Let me take a look at the fibs here real quick. We'll take because these are so close here, we're going to take this range right here. So 157.39 can be our weekly pivot. And we can use this obviously trend line from previous week, and then this swing high here at let's see, 171.19 is the precise level. So back up above 171.19, we'll look to test 178.20, get back up above 178.20, and we're looking at swing high from over here. The extension is 188.81. And then hopefully not too much more downside here, but we'll just give you some ideas. Should that get rejected, so below 157, which will be our kind of near-term support, obviously. You're looking at 142.78-ish, and then a breakdown of that would get us back to test these April lows here. Extension's 125. This is 121.99. All right, and then last but not least, I had a request for Tesla. We talked about Tesla. Excuse me. We talked about Tesla respecting this trend line here. It initially did not. This is the pretty much the recovery. After the 22 bear market kind of retest here. So Yeah, we did break down below. We did close down below. This area here, we were looking as important support here. We did hold, these May lows here from the recovery after the April 2025 tariff gate sell off. So that's important. After we break down kind of diagonal support lines, I start looking to swing lows to the left here, and that basically brought us back to here. So um, it looks like we're right back up above to test this diagonal trend line here. So that would be constructive to get back up above what was support for the last few years, couple years here. Um, that's kind of like the bigger picture. Obviously, we're below the weekly 20, which is around 378.69. This we do have pretty much a weekly bearish fair value gap here. So this imbalance is getting rebalanced. So I think really for Tesla near term, getting back up above this support level here is really important. That will rebalance this 50% of this range here. Maybe we get another little pullback if there's not continued momentum. The weekly doesn't look great, to be honest with you. There is, let's see here. Yeah, we got a gap here. So I think first test here would be get back up above this daily, which is around 339. We'll call it 340. Top of the gap here. We need to reclaim this gap here. Gap fill gets us to about 370. That would be constructive for sure on Tesla. So yeah, it's not the prettiest chart, but we do I do have a daily MACD cross back over, cross back up, and ready aim fire signal, and it looks like the squeeze to the downside is losing momentum. So yeah, as far as fibs go, I think I would just take this whole range here. Take the whole range. Boom, boom. 50%. We're looking at 319.59 as our pivot. And then obviously get back up above 340, 342. We can potentially fill the gap. That would be nice. Should we break down below 319.59, we'll obviously just look to support. And if we lose support there, that would be really bad. And the extension to the downside would be 268.46. So, all right. Thanks for hanging out. We'll see you in the next one.